Hi, everybody, and welcome to the IC Top Chats. Today is April 6th, 2023. This is the fourth or fifth time we've done this session, and this is always a very popular session on how to set your fees as an independent consultant. We're going to talk about it from the perspective of effectively calculating your numerator and your denominator of the number of hours that you have to work, and that becomes effectively what your per diem rate, your daily or hourly rate could and should be. So let's pop right into it today. There we go. When we're talking about setting your fees, I think a lot of us feel like this, particularly when somebody says, what do you charge per hour? And then when we go and we step back to our offices and we think a little bit further about it, we do this before while we're trying to calculate it. Hopefully I get you beyond this perspective today. We feel like just telling our clients this, probably not advisable. And I think our clients oftentimes, or perhaps our friends, our parents, our colleagues think this is the way we operate. That being said, the reasons we want to think about our pricing are the items I've listed here. You need to have a sense for why you're charging, how you're charging, what you're charging your clients. I just did the Evaluation 101 session with the St. Louis chapter of the Grant Professionals Association. And as I got to the end, I'm not at all surprised that somebody asked me, so what do people charge? How do they charge it? And I said to them then, I'm going to say the same thing to you now. When you're working with your clients or your potential clients and you're talking about pricing, you need to do more than just say, well, I want 10% or 5% or some percentage. That's the kind of rule of thumb fallacy. That's what I call it anyway. We need to get beyond that perspective. I think it's fine to use that as a starting point, but you need to have something that backs up why you deserve 5%. At some point, you need to calculate your time, but you can't say your time is worth anything until you have something to attach to it. So we're going to talk to that attachment, that hourly rate or that daily rate that we believe we deserve. We need fair compensation. I mean, the reality is we are independent consultants. Some of us are doing this as a side hustle, and some of this is our full-time job. Some of us have one-person operations, and then I work in an operation with several people, and so it becomes a little bit of a different calculation for those sorts of things. Frankly, I want you to charge what's appropriate to your clients, because I want you to be in business for a while. Because if you're here talking to us today, I have every reason to believe you're thinking critically about what you do, and you're probably pretty amazing evaluator. And I want you to stay in business. And I mean that because as we professionalize the independent consulting evaluators, there will be a lot more of us. And as there's more of us, we're going to do a better job. And as we're doing a better job, we kind of dismiss some of those things that we hear about how evaluators take advantage, they charge too much, they don't know what they're doing, they put out a bad product. And I know we are the people who are here today don't do that. And it's important to me that you learn how to be professional about your operation. And most importantly, you charge enough to stay in business so that it's worth your while to keep doing it. And you can develop your process so that you can be a better consultant, you can be a better evaluator, and you can be around for a long time and retire happily. That's really the main thing. Some people will say pricing strategies vary depending on circumstances. I definitely want to get into that in the chat portion after we're done with the presentation portion today. Some people say I have a different price for these clients than I do for that. I'm going to put out some ideas around that, but I'm not going to go too far into it. It's an interesting thing. Here's a perspective. I forget which book I read this in, but a carpenter comes into a house to fix a leaky stair, and the carpenter walks up, presses on the stair, finds the squeak, takes out a nail, presses it down, hammers it in, and then presents this bill for payment. And the owner goes, wait a second, the nail costs 25 cents. Why is this $60.25? He says, it's 25 cents for the nail, but it's $60 for knowing where to hammer the nail. we do this exact same thing. We're professional consultants who provide value to our services. In this situation, the carpenter was providing the value of getting it done right the first time. We oftentimes are brought in to do things the first time because we're collecting data, we're doing analysis, we're great at our report writing, we have interactive data, dashboards, whatever it is. So it's fine. What this is telling you is it's fine to charge what you're worth, because that carpenter had to drive there. The carpenter has to have a truck that they pay for. It takes gas. It has, you know, all the ladders and the things that you have to put on a truck. Frequently you have support in the way of doing that. You have workers' compensation, insurance. There's a lot of things that go into that $60. So that carpenter in that situation is worth every bit of that $60 because they knew where, and there's a value on the part of the homeowner, and there's you know, there's a value on the part of the carpenter in this situation. So getting into fees, generally we're talking about the payments, particularly in cash or some sort of cash equivalent of, you know, checks and things like that, that is delivered to the consultant as a part of value from the client. What types of fee arrangements we're talking about today? We're going to be focusing mostly on identifying our hourly or daily rate, which can be calculated into a fixed fee, or honestly, a value-based billing. A value-based fee is also what we're talking about here, although I didn't highlight that. Really, we're going to be talking about the hourly and daily rate and how you calculate it. And the steps are fairly simple. We identify the actual number of days that you can work on billable activities. An important piece in that is you will be working a lot of days on your business that are not billable, that are not client facing, as we say in my practice. Also, separately, you'll identify your costs. In just a second, I'm gonna actually share in here some folders, and you can download the documents that I'm going to be working on, so you have that, and so you'll be able to do that. So you identify the number of days you can work, or which become hours that you can work per year. You identify your costs. You put in your desired compensation, whatever that may be. Add your overall your other costs of doing business, your insurance, the cost of your office, your computer, all the things, and then you divide it by the billable days, and that becomes your hourly rate. So let's look at what that looks like. So let's see, probably seeing me flip between different things here. Here's the Google Drive. I'm going to put that in the chat for everybody to see, so it's there. And then in that Google Drive, you'll see these documents. And I'm going to open this up. There's two things. There's a handout, which is just a Microsoft Word document. It's adapted from the workshops that Laura Keen and I do that were originally developed by Gail Barrington. And I've created this fee calculation example. I just changed it around today. So I'm going to pop that open. I think I've got it right here somewhere. Well, maybe not. How about, I think if I just click on it, it'll open up. How about that? This is opening up in my, I'm not using this. Let's see what this looks like. This is what it looks like in Google Docs. Yeah, I tried this before. It is an Excel document if you download it, but I opened it up through Google Forms. So let's see what happens. So I've got, I'm not sure how this is going to work because this is in Excel. I'll download it if this seems wonky. But big idea here is, actually, let me open up the other document. Let's open up and just talk about it broadly in the doc. So this is the document. This is set up, and we're looking at this as a Google Doc as opposed to a Microsoft Word doc. Effectively, you're going to look at your total time. You're going to identify the number of weeks which relate to days of vacation, number of holidays you'd have, sick time. You can see this example down here. You subtract that non-working time from the year, and that becomes the amount of time you have available to do your job. Take out some time for administration, professional development, and marketing, and that becomes the time you have left to actually work on your client work. Now, we're assuming you're working a full-time job here. You can adjust any of this however you like, and we're going to do it in the Excel or I guess the Sheets version in just a second. In this example, you've got 52 weeks. That's how many weeks there are in a year, 260 days. That's 52 times 5. You take out vacation. I will say in Canada, they take more vacation than we do. So isn't that nice? We should all do that. 4 weeks of vacation. This was originally Gail's calculations here. You look at your public statutory holidays. They have 2 weeks of holidays in Canada, a week of sick time. That leaves you with 45 weeks. You decide how you want to do this, right? Take out weeks for administration, professional development, and marketing. Now, how do you know how to do this? Well, the first time you do this, you won't. But if you're using a time tracking software, you want to keep track of this. And this is an important thing for time tracking software. So you can think about this after a year of activity, or even a month of activity, or something like that. Maybe 3 months if you want to look at it by quarters. You can estimate this a little bit more accurately. But these are just some suggested numbers. Okay, so that's how many hours or days or weeks you have to work in a year. 33 weeks in this example. The other piece is calculating your costs. You'll see there's a lot of different startup costs that are listed here. So you can flip through that and think about that if you're starting up. We're not going to talk about that today. We're going to talk about your annual costs, your annual overhead expenses. What are those things? Those are license renewals and legal fees and travel. It's accounting. It's insurance and marketing. You're going to spend time with AEA, which I suggest. What's it cost for membership renewal? More than it ought to, probably, but that's the way these things go. Are you going to take courses? You want to budget that in. So you're building out your budget, and these are the expenses. Maybe you're looking at last year's budget and you're putting that in. So these are the expenses that you're going to have. Probably want to make sure you have a pretty decent computer, because that seems to be our main tool we use. Do you have utilities? Cell phone is probably an important one. So you add all those costs up and you come up with a total. So I'm just looking at the worksheet. We're going to do this in real time in just a second. Add all your salary here, put in your overhead costs, those are added together. Then you divide by your number of billable days, add in something. She calls it profit, I call it buffer. And then you come up with your final daily rate. In this example, there's $75,000. Again, we're just looking at a static version of this. I'm going to do this live with the Excel or the Sheets version in a second. You've got $10,000 in overhead costs. I think that's a little bit low personally. Again, this is just an example. Your total annual costs are $85,000. $680 there for your base daily rate, adding in a buffer or a profit of 10%. That gives you your final daily rate of $750. Divide that by 8 hours, and that's your hourly rate of $93.50. I'm actually going to download this, but we're dealing with the version that I was working with earlier. That way, also, I know a lot of you guys are actually in here in case you're starting to edit things. There's a budget for budget calculation for a whole different program. Let's close that down. I'll pull it up in a second here. This is the one I put together this morning. This is my version. All right. I close that down, but nothing there. All right, so when you're looking at this, I give an example. In this situation, how do you decide your salary? That's a great question. A lot of us determine our salary if we were not independent consultants and we went to go work for an organization. What kind of salary do we think we could get? I put in 100,000 because that's, if I were a director of institutional research, which is the job I had before, with my experience, I think I could be at 100,000 or more. Probably be even 125 these days. I'm not really sure, but that's the number I throw in. Overhead costs in this example, by the way, you can't edit this. If you download this in Excel, which I think is probably a good way to do it, you can't edit this here because this is the locked example. You can edit the unlocked. It's the exact same version. You can, anything yellow is where you're going to edit things. If you think it's 15,000, that's where you do it. Billable days. This is kind of where we're going. I'm showing this to you, and I'm going to go and show you how I've actually created a couple new spreadsheets that are in this workbook for you to think about. So you've got the number of billable days, 165, an overhead of $15,000, and a buffer or profit of 10%. In this situation, you put in your desired salary of 100,000. This all comes down and it says you should be charging $95.83 per hour, probably round that up to $100 an hour in this situation. Again, these are based on a lot of assumptions, but let's look at your overhead costs. So over here you have a spreadsheet that I haven't filled out with my own expenses or any estimated expenses, but it's just different things you can put in here. I added a couple things when I was putting this together earlier. You've got license renewals, travel, all the same things I said earlier. If you put this all together, I'm just going to throw some numbers in here. You'll see at the bottom it adds up. I think cell phone. Let's say you're paying who knows what you're paying. Let's say you're paying $1,200 a year for that. Anyway, it's going to all add up. Not saying you're paying that much, just a number I threw in there. Anyway, so this adds up, and you can take this number and you can put it over in your example. And you'd put that into overhead. How do you determine your billable days? Here's another calculation that I threw in here for your own example. Again, 52 weeks, 260 days. This is Gail's example of 4 weeks of vacation, public statutory holidays, sick time. That's the remaining days, weeks you have per year to actually do your job. Take out time for administration, professional development, and marketing. That's the number of client-facing weeks and days you have per year to do your job. And if you're like me, you spend a lot of time in profession and administration. So this could probably be more like 15 weeks. This professional development, I do a lot with IC topic chats and other things, could actually be more like 5 weeks out of the year. And so I'd only have 100 days a year to do it, but that's because I have a staff and I spend a lot of time in administration. But anyway, these are tools for you to work through. This Excel spreadsheet, I think, can be very valuable. Again, this is an unlocked. If you know what you're doing with Excel, feel free to play around with this, and if it makes sense. If you don't know what you're doing, stick with the locked, because then you won't change the formulas around, and it'll kind of work pretty well for you. Gail's original example that's in the handout is right here. You can see that as well, and that's how we came up with that $93.50, which I think we saw over on this sheet right here. There it is. Okay, I'm going to go back to the original PowerPoint. I want to talk a little bit about fees and what we know to be the case. All right. Okay, great. Thanks for that. So really, what do I charge? I do want to start by saying what I'm going to share with you is information we gathered in 2015, so it's dated. And I don't want you to use this information as a way of saying this is what I should be charging for my fees, right? I want you to know that this is what other people have charged, and it gives you kind of an area to work within. You should understand that your fees are set based upon a lot of factors, your experience. Really, the big piece in your numerator is going to be what you think you're worth regarding a salary. So that salary is going to drive everything. If you think you're worth 50,000 or 150,000, that's going to be a major difference in your hourly rate. The amount of hours you can work per year, that's going to be a little less flexible because you're going to be doing it. But if you spend a lot of time doing administration, a lot of time doing marketing, it's going to change some things. I talk about price fixing here as a way of saying, I'm not telling you what to charge. I'm just giving you some information so you can give some relevance to what you decide. So what we do know is that in 2015, the median rate that people charged was $100 an hour, irregardless of where they were. More or less what you can see here, again, 2015, a lot of things have happened since 2015, as you are aware. The 25th and the 75th percentiles were between 80 and 127. I would say we're probably the 25th percentile these days. If I had to guess, and I don't have any data to support this, I would say the median is now probably more like here. I think everything would have been switched up. And so we're probably talking between 100 and 150 these days. Again, just a guess. I have no idea. This is a good point to make. Your fees are in direct correlation to your client's annual budgets, meaning the amount that you can charge a person is going to be in some degree the amount that they can afford to pay you. I'm not saying hourly rates, I'm talking about the amount that you'll end up charging, the amount that they can afford to pay you. I don't think that a very poor client should get paid, you should only charge them $40 an hour, and a very rich client should be charged $200 an hour or $500 an hour. I'm not saying that. What I'm saying is they have a budget of $1 million a year, they have more that they can afford to pay in the way of they have a bigger budget for evaluation, is what I'm trying to say there. Anyway, those are some different ideas. Here's my 5.5 rate ideas for you. You need to know your rate for the purposes of scoping out your projects. We're not going into scoping out projects today. Your project costs, the number of hours that you're going to spend on certain things like surveying and data cleaning, report writing, interaction with your clients. You need to understand what you're doing. That's a separate conversation, but you need to be able to multiply those hours times a rate that makes some sense, that's defensible if a client asks you, and they should ask you, and you should be prepared to answer that question. You should be calculating your rate on a regular basis. Clearly, we shouldn't probably be using the same rates from 2015 that I just shared with you. We should probably be thinking about what are our costs today. We've had a lot of inflation in the last 2 or 3 years. And so we need to think about how that impacts us. I know I have to think about that with regards to my staff. Consider the value that you're providing in relation to your client's program. I'm not saying you change your rate. I think some people are going to say that when we get into the chat, because it's usually what we talk about. I don't personally change my rates based upon my clients, but I know other people do. I think we have a rate that we like to go after. Internally, we actually know what our staff costs exactly per hour with overhead rates. It's a little bit of a different calculation when you have a bigger group of people, but in many ways, we know our value in relation to our client's program. And so that's a value that we end up identifying in ways that we put out an annual budget for them. Please use the resources I've provided to you with that spreadsheet. I think that's a great way to think through and add up all the things. Feel free to reference our work that I just showed with you, but be careful about using that to calculate your costs. I do want to point out there are 2 great resources for you: Consulting Startup and Management by Gail Barrington. She talks about this in great detail. And Patrice Steele, who's an occasional collaborator and contributor, and she's been a member of the ICTIG for a number of years. She wrote a book also about how to calculate a lot of things, but calculating your fees. That's a piece of what she put in. And that's it. I tried to go through this a little bit more quickly, but it seems like I still spent more time than I expected. All right, with that, I'm going to stop the recording and we will go into the chat portion of the thing. Thanks, everybody.